Hey out there, happy holidays, everyone. Thanks for tuning in to this month's real estate newsletter. Today I'm going to be talking twofold. One about 2024 performance across the real estate market, and then we're going to spend some time talking about 2025 outlook across the entire industry, and especially as a new administration comes into place and what that means for the real estate market. So without further ado, let's hop right in. 2024 performance across the real estate market. It's helpful to provide some context just to understand where things were coming into this year. As I've mentioned before, we've had an 11-year run up in pricing dating back to 2013 coming into this year, coupled with a 14-year inventory shortage on homes across the United States. So those two things have played a pretty significant role in performance across the real estate market. Obviously, it's elevated home prices, and it's also been challenged in terms of supply with inventory, both existing and new construction inventory, as builders have looked to catch up in these past few years, especially coming out of COVID. So important to understand that coming in. If you look at 2023, sold homes across the United States was 4.1 million. That was the lowest amount of home sale transactions since the mid 1990s. If you remember, coming into 2023, interest rates had jumped in June of 22 from around 3.5% on average up to 9% in June of 2022. Which really impacted 2023's performance as interest rates were still very high. Coming into this year, interest rates started about 8%. And 2024, as we close this year, every indicator says that it's going to be pretty much in parity with 2023 performance. Also, 4.1 million homes sold, driven by some of the higher interest rates. The good news is a fewfold. Interest rates have started to gradually come down. As of today, we are sitting at 6.8% on a 30-year fixed conventional loan. So we've dropped about 1.5 since late spring, early summer, which is a positive indicator. Also, inventory has improved 30% on a year-over-year basis from 2024 to 2023. So that means that new construction, especially, is starting to really catch up on inventory. We talked about having a 14-year shortage in inventory, thus the impetus on putting new construction homes to work and catching up with that demand. 30% inventory improvement. So that's fantastic. A couple other key statistics for you in terms of the makeup of sold homes across the United States this past year. For sale by owners, normally any year, 12% of all home sales transactions are for sale by owners, and the remaining 88% are through a real estate agent. So call it 1 in every 10 homes is usually sold by the homeowner themselves. This year, 6% of all for sale by owners happened across transactions this year. So less than half of what a normal year is, which is fairly ironic given some of the settlements and Association of Realtor lawsuits that have taken place this year. If anything, I think that highlights the fact that more than ever, you need experience, you need somebody that you trust, and someone that's going to represent your best interests with a real estate agent. For sale by owners have been very challenged this year to get their own homes sold without representation. So very interesting statistic there. In 2024, 1 out of every 4 transactions was all cash. First-time home buyers typically represents about 1 out of every 3 home sales that happen, or 32%. In 2023, it was at 32% of all transactions were from first-time home buyers. In 2024, it dropped to 24%. So 1 of every 4 transactions was a first-time home buyer. The median first-time home buyer age was at 35 years old in 2023. That jumped to 38 in 2024. So we're starting to see a trend. Sellers are becoming older and more wealthy, and some of the age 26 to 35, 38 years old, first-time homebuyer range is starting to get further aged in terms of their ability to buy. And we're going to talk about that here in a little bit and what that's going to mean heading into next year. But it's been an affordability challenge for a lot of the millennial and Gen Z population that's entering the market trying to buy their first home in that 26 to 38-year-old time frame. It's been very challenged for them. And we're going to talk a little bit about what that's going to mean next year. As I mentioned, the average selling age of a homeowner in the United States this year was 63 years old. 8 out of every 10 homes that were sold did not have someone in the household that was 18 years of age or under. Also, sellers, homeowners are holding on to homes longer than they have ever before. If you look from 2000 to 2008, the average time that a homeowner was in their home was around 6 years before they were looking at something new. This past year marked 10 years on average that the average homeowner has been holding on to their homes. So we have older, average median age sellers. They're holding on to their homes longer. They are wealthier than they ever have been before, which has really created fantastic equity for them, but it's also created a gap for that 26 to 38-year-old age range and being able to afford, especially their first-time home buying purchase. So those were some of the key things that stood out to me from 2024's performance that hopefully help educate you a little bit on what's been happening in the market. And we're also now going to talk about what 2025 looks like in terms of real estate performance. Okay, 2025, here we go. A few things. It would be prudent to talk about what's going to happen in the political landscape with the new administration coming in, and also what that's going to mean from an economic standpoint, as we know that interest rates are driven primarily off of what's happening with economic and job performance. So a couple of things that were mentioned yesterday on the outlook. The new administration has said that they're going to be focused on ramping up new home construction, which is excellent, especially in the industry that I'm in with new construction. They are going to work to deregulate for builders to be able to build faster with less hoops to jump through and build more efficiently than they have been in the past decade. That is a huge, huge win for our industry and for inventory levels across the real estate market. They have even alluded to potentially looking at opening up some of the federal land across the United States to be able to allow for some development to continue to be able to provide home inventory across the United States. Also, they're going to be focused on creating new jobs. The last job report that came out for the month of November was a slight improvement. However, inflation still jumped up by a couple of percentage points to 2.7%. The government wants to see that somewhere around the 2% range to get inflation under control. The new administration is going to be heavily focused on improving job availability and creating new jobs. Right now, the unemployment rate in the United States is still 4%. That's the highest that it's been since the late COVID timeframe in, late 21 to early 2022 timeframe. So that's going to be something that they're very focused on. The other piece that they have mentioned is right now we still have a very high national debt. Government spending is still at an all-time high right now as well. That's some of the things that they've alluded to with Elon Musk and Vivek Ramaswamy with the Department of Governmental Efficiency and what they're going to be focused on in terms of eliminating wasteful government spending and getting the national debt under control, which is going to help open up spending and more money to be flowing into the areas that they want to focus on, specifically at the gas pumps, groceries, new jobs, and as well as ramping up home construction, just to name a few. So all positive indicators there. As we look to interest rate predictions for 2025, if you've been holding your breath waiting for interest rates to jump back down to the low 3%, maybe 4%, and live in that world, don't hold your breath. That is not coming anytime soon, unfortunately. Outlooks for 2025 is that there will be anywhere from 6 to 8 rate cuts that take place. They are going to be small marginal rate cuts, and they're going to be dependent on what's happening with the economy and with job reports. But predictions are that rates are going to end in 2025 somewhere in the 6% range. There is a chance that they jump into the high fives, 5.8, 5.9%. Brian Buffini predicts that it's going to be anywhere between 5.8 to 6.2%. So that's not a huge change from where things are today. So if you're hoping that they're going to make a huge jump and you're going to be able to lock in a 3% interest rate by the fall of 2025 for 30 years, don't wait. That's not going to happen. We all are going to have to get really comfortable with living in the high fives to low 6% rate for the foreseeable future. So as we look to 2025 predictions, besides interest rates, a couple of key statistics I wanted to share with you guys that real estate and chief economists for the National Association of Realtors are predicting. Existing home sales will grow 9% next year. New home sales will jump to 11% growth next year. The median home price across the United States is expected to rise by 2%. And mortgage rates are going to be somewhere around the 6% range by the end of 2025. They are estimating that job gains are going to be around 2 million in terms of newly created jobs moving into next year. So that's a very, very positive indicator. I mentioned earlier that 2023 and 2024, there was 4.1 million homes sold across the United States, which was 2 years in a row of the lowest home sale transactions since the mid-1990s. They're expecting that to improve substantially next year to 4.5 million homes that will be sold in 2025. So all very, very positive indicators there. If I can offer some additional tips and advice for buyers primarily, for those that have been considering buying, sometime in the next 3 to 6 months, 6 to 12 month time frame, there's a few things that I would say. Here are some things that I would do to readily prepare yourself for what's going to take place here, probably by the spring to early summer of 2025. As we mentioned, sellers have been holding on to their homes longer. Anytime after an election takes place, home prices will continue to increase in value. So that's a great situation for sellers to be in. The challenge for buyers has been that limited inventory and higher prices and higher interest rates has not been a market that everyone wants to enter into. However, if you have to make a move, you have to make a move for various reasons. As interest rates continue to come down in a positive direction and inventory starts to improve, what is that going to create? It's going to create huge competition. There are many other people that are sitting on the sidelines right now that for various reasons are waiting to buy, but it may just take interest rates dropping by another 0.5 point, or it may be that the spring is going to be the healthiest time for them to put their own home on the market and actually go and buy the new home that they need or make the move to the location that they've been wanting to. There is a lot of pent-up demand that is waiting to take place by the spring to summer of 2025. So my tip and advice to you is if you're considering buying, my job is to get you ready to be able to buy in a quick and efficient manner once competition starts to become evident. That includes making sure that you're getting pre-qualified and pre-approved so that when the time comes and you find the home that you want, you are not having to submit an offer that is competing with 8 other offers, and we haven't done due diligence to make sure that you're pre-qualified, pre-approved. You are ready to go. You're presenting a strong offer that's going to motivate that seller that knows that they can close in a 30-day or less time frame, and that you are a very motivated buyer to get what you want. So as a buyer, that's what you can do now to get yourself ready for that time when you find the perfect home and you're ready to buy, and you present a really, really strong, compelling offer to get the home that you want. I will also add that pricing is going to continue to move up. The cost of building, the cost of materials, the cost of labor. As I mentioned, seller values on their homes is going to continue to increase in value between now and the spring, or now and summer of 2025. You may be waiting for your interest rate to drop by 0.5% or 0.75 of a point, or whatever that's going to move the needle enough to say, all right, we're ready to get in the game. My question is, have you done the math to know what the savings is on that 0.5 point over 30 years or even 15 years on that fixed loan? Is that going to deliver a stronger return and savings for you than the home that you may want to purchase in the next month or two that now jumps by $20,000, $25,000 3, 4, 5 months down the road from now? Because they will. I'm watching that happen right now in the new construction industry. Prices are not going down, and prices will only stay flat for so long until the market will dictate what home prices are going to be. And the market always tells us what prices are going to be. The cost of labor, the cost of materials, everything is going to continue to go up in value. So don't let that small percentage point in your interest rate be the deciding factor, because at the end of the day, you may end up having to pay more on the purchase price for your home, or having to compete with all cash offers and heavy competition for the home that you want, versus maybe purchasing sooner at a lower price with less competition, and your equity and your appreciation gets an earlier start on that clock. So those are my tips for those that are considering buying in 2025. I hope that everybody finds this information useful. As always, my phone is always on. If there's any questions that you have, I am more than happy to help you or help any of your friends or family as they're considering a real estate move, whether it's in the state of Idaho or it's any other state that you or your family or friends live in across the U.S. I'm here to be a resource for anybody that needs it. I always appreciate the referral of a friend or family member as they're looking to buy or sell. And as always, I appreciate everyone. Thank you for your continued support. I wish you a very happy holidays, and I will see you in 2025.